Already the world's richest person, Elon Musk is now closing in on a $1 trillion fortune, with SpaceX preparing for a massive IPO that could be the biggest in market history. His wealth may reach an entirely new level, and if this launch goes as planned, it could change financial history forever. SpaceX plans to raise up to $75 billion when it goes public this month, the largest ever stock market debut. The company will offer exactly 555 million shares at $135 apiece in an initial public offering. Stop and think about that number for a second. Not 75 million, not 75 billion spread across years, $75 billion in one go. The estimated proceeds would easily top the $26 billion raised by oil giant Saudi Aramco in 2019. The offering would also give SpaceX a market value of $1.77 trillion. For context, only 6 companies in the S&P 500 are currently worth more, with Nvidia tops at $5.2 trillion. SpaceX walks into the room and immediately pushes out companies that took decades to build. Musk owns a stake in his reusable rocket maker that's worth $866.5 billion on paper, according to the company's updated IPO prospectus. That's on top of Musk's $350 billion-plus stake in Tesla. You run those numbers, and you're not looking at a near trillionaire anymore. Shares aren't even public yet, but Musk may have already become the world's first trillionaire, based on how SpaceX has traded recently on private markets. Barclays calculated the CEO's 6.4 billion shares are worth $830 billion. Add his $290 billion in Tesla stock, and he's now sitting on $1.1 trillion. Different index, different methodology, slightly different number, but both are circling the same territory. The territory of $1 trillion, a number that has never belonged to a single human being in history. Trading in SpaceX stock is expected to begin as early as June 12th, with Forbes projecting that June 2026 could be the moment a trillionaire officially appears on its billionaire list. Goldman Sachs is the lead banker for the offering, followed by Morgan Stanley, Bank of America, Citigroup, and JP Morgan Chase. That's not a list of banks, that's a list of the most powerful financial institutions on the planet, all lined up to ring the opening bell on what could be the most consequential stock market debut in the history of capitalism. JP Morgan Chase boss Jamie Dimon is reportedly planning to discuss the IPO with thousands of the bank's high-net-worth clients this week. Dimon will reportedly host a live interactive discussion to pitch SpaceX stock to the people who move markets. When Jamie Dimon personally calls his biggest clients to talk about a single deal, you know this is different. Typically, a company proposes a price range at which it wants to sell its shares. Then, the evening before trading commences, it nails down a final price around that range. But in Wednesday's filing, SpaceX offered only the fixed $135 price. No negotiation, no range. Here's the price, take it or leave it. That kind of confidence from any other company would read as arrogance. From SpaceX in this moment, it reads like a company that knows something everyone else is still figuring out. Given Musk's global name recognition, the offering may require very little marketing to prospective investors, unlike many other IPOs. And SpaceX says it anticipates offering individual retail investors the chance to buy shares when it debuts through trading platforms, including Schwab, Fidelity, Robinhood, SoFi, and E-Trade. So this isn't just a play for hedge funds and pension managers, it's being opened up to everyday investors. The guy saving for retirement on Robinhood is being invited to buy a piece of the company that's about to make Elon Musk a trillionaire. Musk stands days away from becoming the world's first trillionaire, and Democrats are seizing on the milestone as a fresh rallying cry against extreme wealth heading into the 2026 midterms. But before we get into where this leads and whether it holds, we need to understand how this man got here, because the path to $1 trillion doesn't start in a boardroom. It starts much messier than that. Born into the wealthy Musk family in Pretoria, South Africa, Musk emigrated in 1989 to Canada. He received bachelor's degrees in 1997 from the University of Pennsylvania before moving to California to pursue business ventures. In 1995, Musk co-founded the software company Zip2. Following its sale in 1999, he co-founded X.com, an online payment company that later merged to form PayPal, which was acquired by eBay in 2002. He sold Zip2 for $307 million in 1999, netting him $22 million. He then founded X.com, which later became PayPal and was sold to eBay for $1.5 billion in 2002, earning Musk $175 million. Most people take $175 million and stop. They buy houses, they sit on boards, they enjoy the life. Musk did none of that. In 2002, he founded SpaceX with the almost ludicrous mission of colonizing Mars. The next year, he sank an initial investment of more than $6 million into Tesla, which was then not much more than a pair of founders and a vision of electric sports cars. SpaceX endured multiple failed launches, which almost put it out of business, while Tesla ran into trouble as its engineers realized its prototype battery packs were likely to catch fire. Neither SpaceX, Tesla, nor SolarCity were doing well and were losing money. Musk was living off personal loans to survive. The man who is days away from becoming the world's first trillionaire was just a decade and a half ago, personally borrowing money to eat. By December 2008, SpaceX won a $1.5 billion contract with NASA to deliver supplies into space. Meanwhile, Tesla secured more outside investors, and in 2010, Tesla held an initial public offering and raised $226 million. Those two events, one contract, one IPO, were the turning points. The doors opened, and Musk walked through both of them running. In 2024, NASA awarded SpaceX an $843 million contract to build a spacecraft to deorbit the ISS at the end of its lifespan. The same company that almost went bankrupt on multiple launches in the early 2000s is now the company NASA calls when it needs something critical done. By 2024, more than half of the world's orbital launches were done by SpaceX. At the start of 2020, Musk had a net worth of $27 billion. By the end of the year, his net worth had increased by $150 billion, mostly driven by his ownership of around 20% of Tesla stock. That's how fast it moved, $27 billion to $177 billion in 12 months. On January 7, 2021, Musk, with a net worth of $285 billion, surpassed Amazon founder Jeff Bezos to become the richest person in the world. Tesla's stock sank 65% in 2022, before again soaring to new heights in the years that followed. His association with the second Trump administration received backlash, resulting in his net worth dropping by $126 billion between December 2024 and March 2025. Then the market recovered, then the SpaceX IPO filing dropped, and now he's back, bigger than ever. The S&P 500 rose 5% in May, and the Nasdaq 8%, lifting the combined wealth of the top 10 billionaires by $220 billion in a single month to a total of $2.9 trillion. At the center of it sits Musk. His personal fortune jumped by $53 billion in May alone, $53 billion in 1 month. That's more than most countries' annual GDP, added to one man's net worth in 30 days. The journey from zero to nearly $1 trillion has been anything but smooth. It's been rocket explosions and near bankruptcies, stock collapses, and political controversies. But the trajectory, the stubborn, relentless, compounding trajectory, has always been the same. Up. Most people think SpaceX makes money launching rockets. It doesn't, at least not primarily, and not yet profitably. The real engine of this entire empire, the thing that actually makes the math work, is a constellation of satellites sitting 340 miles above your head. As SpaceX pitches investors ahead of its mammoth IPO, there's another part of its business that dwarfs the rest in terms of growth and profits: Starlink. SpaceX said its connectivity unit, which is primarily comprised of Starlink, generated $11.39 billion in revenue last year, accounting for 61% of total sales. Starlink is the company's profit engine. It was the only profitable division last year, generating income of $4.42 billion. while the rocket launching unit lost $657 million, and the AI division had a deficit of $6.35 billion. So the story being sold to investors, rockets, Mars, orbital data centers, is essentially being funded by a satellite internet service. Starlink is the moneymaker. Everything else is the dream. Since launching in beta with 10,000 users in 2021, Starlink grew to 1 million users in 2022, 2.3 million in 2023, 4.6 million in 2024, and 9 million by the end of 2025. By February 2026, SpaceX reported Starlink had surpassed 10 million active customers across 160 countries, territories, and markets. Starlink provides global high-speed internet coverage using a constellation of more than 10,200 satellites in low Earth orbit, a region of space within 1,200 miles of Earth's surface. That network is a moat. The sheer cost and logistics of putting that many satellites into orbit makes it nearly impossible for a competitor to simply replicate overnight. Competition is on the rise. OneWeb, operated by France's Eutelsat, has a constellation of more than 600 satellites. Amazon has sent up more than 300 satellites over the past year as it inches closer to launching its LEO service, which will eventually include a constellation of roughly 7,700 satellites. But 300 versus 10,200, that's not a race that's close yet. From 2024 to 2025, SpaceX's revenue grew 33%. In the first 3 months of 2026, its revenue rose 15% year over year. Revenue growth, user growth, geographic expansion, all moving in the same direction. Starlink recorded an 86% increase in adjusted EBITDA between 2024 and 2025, while its total subscribers doubled. When a company doubles its subscribers and nearly doubles its earnings in a single year, the market pays attention. It pays handsomely. Then there's the rocket side of the business, the part that everyone sees on the news. A Falcon 9 booster has demonstrated 34 reflights at $67 million per launch, and with 620 orbital launches completed and a 99% plus mission success rate, SpaceX has cracked the code on reusability. That's an extraordinary engineering achievement. You launch a rocket, land the booster, refuel it, and launch it again. 34 times with the same piece of hardware. The economics that unlocks are massive. The federal government of the United States has signed contracts worth $20 billion with SpaceX as of November 2024. Government contracts are the bedrock. They're predictable, they're large, and they're almost impossible to lose once you're the primary provider of a critical capability. NASA doesn't fly to space without SpaceX. The Department of Defense doesn't launch satellites without SpaceX. That dependency is a moat as deep as any Starlink has. SpaceX has a massive estimation of its total addressable market, estimating TAM at $28.5 trillion, the largest actionable total addressable market in human history. The company cites a total addressable market of $370 billion in space, $1.6 trillion in connectivity, and $26.5 trillion in AI. $28.5 trillion. That's the market Musk says SpaceX is going after. Starlink attacking the global connectivity market, rockets owning the space economy, and then AI. An entirely different beast with a number so large it makes the others look modest. In February 2026, Musk made a move that Wall Street was watching for. Musk merged SpaceX with xAI in a deal that valued the combined entity at $1.25 trillion. The record-setting transaction is the largest merger of all time and values SpaceX at $1 trillion and xAI at $250 billion, according to documents viewed by CNBC. Musk announced the deal in a blog post, saying he's creating the most ambitious vertically integrated innovation engine on and off Earth, with AI, rockets, space-based internet, and the X social media platform. The main reason for the merger, he said, is to better build orbital data centers. Orbital data centers. That's the bet. Data centers in space, not on Earth where you need land, power, water, regulation. In orbit, where your rockets already fly, your satellites already operate, and the sun provides near-infinite solar energy. Space-based AI data centers would bypass Earth's energy constraints and cooling costs using Starlink satellites as the computational backbone. SpaceX wants to develop data centers in space and expects to start launching orbital compute by 2028. The sprawling SpaceX business will be split into three parts: the rocket launching unit, the Starlink satellite broadband arm, and the AI company that includes X, the social media platform formerly known as Twitter. In its IPO filing, SpaceX says it sees potential revenue from AI of up to $26.5 trillion. That's the target, $26.5 trillion. That number is larger than the entire GDP of the United States. If Musk captures even a fraction of it, the word trillionaire stops being the ceiling and starts being the floor. But the AI bet is also the most expensive thing happening inside SpaceX right now. SpaceX has further increased its spending following its acquisition of xAI in February 2026. Starlink's success is effectively subsidizing xAI's extensive expenditures. The AI segment recorded a $6.35 billion operating loss in 2025, taking SpaceX into the red. Of the $20.7 billion in total capital expenditure, 61%, about $12.7 billion, went to AI infrastructure. SpaceX claims to have deployed the first coherent gigawatt-scale AI training cluster, known as Colossus and Colossus II, in Memphis and Mississippi. These are not experimental pilot projects. These are full-scale, gigawatt-powered AI training facilities. The compute infrastructure SpaceX is building is on a scale that rivals any dedicated AI company in the world. And then there's the Cursor deal. Musk's recent deal gave SpaceX the rights to buy AI coding tool Cursor for $60 billion later this year. Folding in Cursor's capabilities would give SpaceX access to the coveted business customers now using Anthropic's Claude or OpenAI's ChatGPT. In one transaction, SpaceX gets a foothold in the enterprise AI market, the most lucrative segment there is. SpaceX's initial public offering filings revealed Anthropic agreed to pay $1.25 billion per month for access to its Colossus data centers over the next 3 years. $1 billion a month from one customer. For data center access. That's the revenue model SpaceX is building the AI division around, and if it lands even a handful more deals like that, the losses start to look like temporary investments. As Kathleen Brooks, research director at the brokerage firm XTB in London, put it, the AI trade continues to roar, just in time for SpaceX's IPO next week. The timing of this listing arriving exactly when the AI wave is at its most frenzied. When every investor on Earth is looking for ways to get exposure to the technology is not an accident. Musk has ridden market moments his whole career. This one might be the biggest. Now here's where the story gets even bigger, because SpaceX going public isn't the end of Musk's architecture. For many analysts, it's the first move in something far more sweeping. Musk has almost equally ambitious plans for his other publicly traded company, Tesla. His goal is to transform the maker of electric vehicles into a producer of robot access and humanoid robots. Dan Ives of Wedbush Securities wrote in a research note that he expects Tesla and SpaceX to merge next year. Dan Ives isn't just a random voice. He's one of the most widely followed analysts in the tech sector, and his call is direct. These two companies are heading toward each other. Some investors hope Musk could bring together Tesla and SpaceX in a mega merger, giving the markets a one-stop shop for investing in the tycoon. Dan Ives said, Musk wants to own and control more of the AI ecosystem, and step by step, the holy grail could be combining SpaceX and Tesla in some way to give the connected tissue between both disruptive tech stalwarts looking to lead the AI revolution. Assuming SpaceX hits the NASDAQ next week at or near its expected valuation, Musk will oversee 2 of the 8 most valuable U.S. companies. SpaceX would be ahead of Tesla and Meta among the trillion-dollar names. 2 of the 8 most valuable companies in America. One person controls both of them, and he has over 82% of the voting power in one and the ability to single-handedly direct the strategy of the other. SpaceX has linked Musk's compensation rewards to two milestones: achieving a $7.5 trillion market cap and colonizing Mars with at least 1 million inhabitants. A $7.5 trillion market cap, that's the compensation trigger. For context, only one company in the world has ever come close to that: Apple. And it took them over 4 decades to do it. SpaceX is targeting it as a pay condition. In November 2025, Tesla approved a pay package worth $1 trillion for Musk, which he is to receive over 10 years if he meets specific goals. A $1 trillion pay package from Tesla alone. That number, once separated from its context, sounds like something from science fiction. But Tesla's board approved it, and if the goals are met, it triggers on top of whatever SpaceX delivers. We're talking about a man whose compensation packages are denominated in trillions. Musk has full control of the company. The amendment shows the founder, CEO, CTO, and chairman holding roughly 82.4% of voting power after the offering, enough to elect or eject a majority of the board outright, and to make SpaceX a controlled company exempt from certain NASDAQ governance rules. Public shareholders are just along for the ride to space. You can own SpaceX stock. You cannot tell SpaceX what to do. NASDAQ controversially rewrote its rules last month in anticipation of the megacap arrivals, allowing the largest IPOs to enter its prestigious NASDAQ 100 index after just 15 trading days, rather than waiting months for the index's regular reconstitution. SpaceX is expected to float barely 4% of the company, and NASDAQ index funds will be forced to absorb SpaceX shares mechanically, at whatever price prevails. The exchange changed its own rules to accommodate this IPO. Index inclusion, if triggered post-IPO, could compel roughly $400 billion of passive buying, creating significant price dislocation. $400 billion of forced buying from index funds that track the NASDAQ mechanically pouring into SpaceX stock. That's not a prediction, that's math. Analyst Sean McGuire called the SpaceX IPO the largest wealth creation event ever. And it doesn't just create wealth for Musk. SpaceX director and head of Valor Equity Partners, Antonio Gracias, owns 503 million shares that could top $70 billion in value. Another director, Luke Nosek, has a stake worth about $5 billion. Hedge fund Darsana Capital Partners first invested in SpaceX in 2019 and is such a staunch backer that 60% of its assets under management are tied up in Musk's company. The IPO could result in Darsana seeing paper gains on its investment above $10 billion. The ripple effect from this single event will roll through hedge funds, pension plans, retail portfolios, and sovereign wealth funds. SpaceX is expected to have a hefty weighting in the S&P 500 due to its sheer size, which means most people with investment accounts or pension pots will be exposed to its stock market performance as investors in the company. Whether you want exposure to Elon Musk or not, if you have a retirement account, you're likely about to get some. Now, here's the honest part of the story. The part the prospectus doesn't bury, but doesn't lead with either. Even as it makes a bid for a blockbuster market debut, SpaceX is currently losing billions of dollars a year. The filing shows that the company lost $2.6 billion from operations last year on $18.7 billion in revenue, and the losses kept piling up at the start of this year. The nearly $5 billion gap loss in 2025 was tied to costs absorbed from the XAI merger, while the company simultaneously carries approximately $17 billion in combined space and AI cash burn. Putting data centers in space isn't technologically possible at the moment. The orbital compute dream, the one that unlocks $26.5 trillion in AI revenue, hasn't launched yet. Valuation expert Aswath Damodaran estimates SpaceX's intrinsic value is about $1.2 trillion. That's based on its profitable Starlink business growing to a $120 billion operation in 10 years. Damodaran is one of the sharpest valuation minds alive, and his number lands roughly $570 billion below where the IPO is priced. That gap doesn't mean the IPO is wrong. It means investors are paying a premium for the bet. The Starship launches, the Mars colony, the orbital AI infrastructure, the Tesla merger. They're buying the future Musk describes, not just the business that exists today. The risk factors note that Musk has considerable other roles, and that although he devotes significant time to SpaceX's businesses and is highly active in management, he does not devote his full time and attention. The filing also cites risk from his actions and the attention he receives, noting that his statements and those of his affiliated ventures may draw significant public attention and scrutiny to us and could potentially have a positive or negative impact on our business, relationships with customers and regulators, or stock price. The company itself is flagging Musk's behavior as a risk factor. That's not a small footnote. It's a full disclosure that the man driving the company could also become its biggest liability. But here's the thing about Elon Musk that the numbers keep proving. The safer bet throughout his entire career has been to assume he figures it out. A venture capitalist who backed X, AI, and SpaceX told the Financial Times, "I am not saying our investment process is to just give him money for anything he wants, but to be honest, that wouldn't have been a bad strategy. Never bet against Elon." The SpaceX IPO is the single largest capital raise in the history of financial markets. The man behind it is already, depending on which index you follow, either the world's first trillionaire or days away from becoming one. The companies he controls are being positioned to merge into a single entity that touches rockets, satellites, AI, robotics, electric vehicles, and social media. And he's doing it all with 82% of the votes in the room. Whether the orbital data centers get built by 2028, whether Starlink holds off Amazon, whether Tesla and SpaceX actually merge, none of that is certain. What is certain is that no single individual has ever concentrated this much wealth, this much control, or this many compounding bets in human history. The first trillionaire isn't a prediction anymore. It's an IPO filing.